Hey everyone, welcome back to Wealth for You. If the headline you're seeing looks shocking, it's meant to be. Because here in Singapore, too many of us chase being paper rich, the condo, the car, the $1 million CPF balance. But when the economy turns, it's not your property or your net worth that saves you, it's cash flow. Don't just aim to be rich, be cash flow rich. Because in 2025, cash flow is king. Stay with me till the end. I'll show you why this mindset shift can literally determine your financial freedom and how Singaporeans can build real, lasting income instead of chasing illusions. If you find this message important, tap like so more Singaporeans can see this video, and subscribe to Wealth for You so you never miss another deep dive on building cash flow wealth. Disclaimer. The content in this video is for educational and informational purposes only. It is not financial advice. Always do your own due diligence and consult a qualified financial professional before making any investment decisions. Chapter 1. The Singapore Middle Class Trap. From young, we've all been taught the same formula. Study hard, get a good job, buy a condo, pay the loan for 25 years. Retire at 65. It sounds like success. Yet for many Singaporeans, this journey quietly becomes a financial trap. Month after month, the mortgage drains cash flow. The car, the condo, the lifestyle, they all look impressive on paper. Until a job loss or health issue hits. Then you realize, being asset rich doesn't mean being secure. Because real wealth isn't just about what you own, it's about what pays you back. And the good news is, Singapore already offers several reliable income engines that can help you build that stability over time. CPF Life. A lifelong monthly payout, backed by CPF's interest of about 4% per annum on your retirement account. REITs such as Ascendas, CICT, and Mapletree Logistics, historically providing around 5 to 7% yields, though distributions and prices can fluctuate. Banks like DBS, OCBC, and UOB, known for consistent dividends, typically around 5 to 6% in recent years, depending on profitability and market cycles. Singapore savings bonds. Low-risk, flexible instruments offering step-up interest, fully backed by the Singapore government. These are the sources that keep your finances resilient when markets dip or life throws a curveball. They're what sustain the cash flow rich, while others remain paper rich. Chapter 2. Why cash flow beats capital gains. For years, most of us were taught that the only way to build wealth is to buy and hold until prices go up. Buy low, sell high. That's the dream, right? A big payday when your property or stock doubles in value. But here's the problem. Capital gains are unpredictable. Property prices don't always rise in a straight line. Stock markets swing. Even if your net worth looks huge on paper, it doesn't pay your bills unless you sell something. And when you're forced to sell in a downturn, that paper wealth can vanish overnight. That's why seasoned investors focus on cash flow, because cash flow pays you without needing to sell your assets. It's money that shows up in your account, month after month, whether or not the market is smiling. Think about it. REIT distributions that arrive every quarter, bank dividends that grow with profits, CPF Life payouts that continue for life. This is what financial peace feels like. Your lifestyle sustained by income streams, not by luck or timing the market. When your wealth produces steady cash flow, you stop worrying about whether prices go up or down, because your money is already working for you. Chapter 3. How the rich think differently. So the biggest difference between the rich and the struggling isn't really luck. It's actually how they think about money. The average person, well, they usually ask questions like, how much can I earn from my job? Or how much property can I afford? And even, what's my net worth? But a cash flow-focused person, they ask something totally different. How much income does this asset produce? even if I stop working. That's the real mindset shift that separates those who are just paper rich from those who are truly cash flow rich. While most people are busy chasing bigger homes or higher salaries, the wealthy quietly accumulate income-producing assets, like shares that pay dividends, REITs that send regular distributions, CPF LIFE that provides guaranteed payouts, and even Singapore savings bonds that keep their emergency cash working for them. It's really not about trying to time the market, it's about owning the cash flow. Because when your income doesn't depend on your job, you actually gain something far more valuable than just money. You gain freedom. Freedom to choose how you spend your time, freedom to retire earlier, and freedom to live on your own terms. And honestly, that's what being cash flow rich truly means. Chapter 4. How to start building cash flow income in Singapore. So, how do you actually start building cash flow, even if you're not wealthy yet? The truth is, you don't need millions. You just need consistency and clarity. Step 1. Strengthen your CPF. Treat it as your bond layer. Every top-up to your special or retirement account earns a steady 4% or more, and eventually gives you lifelong payouts through CPF Life. It's slow, but it's sure. Step 2. Add dividend engines. REIT ETFs and dividend-paying blue-chip stocks can generate 4 to 7% yields historically. These include diversified REITs, banks, or broad-based Singapore dividend ETFs, all designed to distribute income regularly. Just remember, prices fluctuate, but dividends compound quietly over time. Step 3. Layer with safety nets. Instruments like Singapore savings bonds or T-bills give you flexibility and stability. They protect your cash while still earning interest, so you're not just sitting idle in a low-yield account. Step 4. Automate and reinvest. Set up automatic monthly contributions, whether it's $300 or $3,000, and let compounding do the heavy lifting. The goal isn't speed, it's momentum. Over time, these small streams merge into a river of passive income. That's really how Singaporeans quietly transition from working for money to letting money work for them. Chapter 5. The myth of more property equals more wealth. In Singapore, many people still believe that the fastest path to wealth is through property. Buy one condo, then another. Collect rent, wait for prices to rise, and one day you'll retire rich. But here's the hard truth. More property doesn't always mean more freedom. Each new mortgage actually tightens your cash flow. Every renovation, maintenance bill, or vacancy just eats into your returns. Yes, property can appreciate, but it's also illiquid, leveraged, and pretty unpredictable. You can't just sell a bedroom to pay your bills, and you can't extract your paper profits without giving up your roof. The wealthy, they know this. That's why they balance property with cash flow assets, dividends, CPF Life payouts, REIT distributions, and interest income that arrives without selling anything. Because really, when you rely only on property, you're house rich but cash poor. But when your portfolio pays you every month, that's when you become cash flow rich, not just paper rich. And honestly, that difference determines who survives the next downturn and who actually thrives through it. Chapter 6. The 3 Rules of Becoming Cash Flow Rich. By now, you've probably realized, becoming cash flow rich isn't about luck or having a super high income. It's really about discipline, design, and direction. So here are 3 timeless rules followed by Singaporeans who build lasting financial freedom. First, rule number 1. Prioritize cash flow, not status. Don't chase what looks impressive. Chase what pays consistently. A humble dividend portfolio can feed you way longer than a luxury condo that bleeds cash every month. Rule number 2. Diversify your income engines. Mix security with growth. CPF Life for guaranteed payouts, REITs and bank stocks for dividends, and SSBs or T-bills for safety and liquidity. Together, these form a really strong foundation that supports you through any economy. Rule number 3. Reinvest and rebalance. Let compounding do the heavy lifting. Reinvest your dividends, review your holdings yearly, and rebalance to keep risk in check. Over time, your portfolio starts to snowball, generating income that covers your needs and eventually, your lifestyle. These 3 rules turn financial freedom from just a dream into a system. Because when your money works harder than you do, that's when you've truly won the game. Chapter 7. The Cash Flow Freedom Formula. Everyone talks about financial freedom, but honestly, very few ever define it. So here's a simple way to measure it. Your cash flow freedom formula. Step 1. Know your monthly needs. Add up essentials: food, transport, utilities, insurance, and family support. Let's say that's about $3,000 a month. Step 2. Add your comfort goals. Maybe you want $500 for travel, $300 for dining, $200 for giving. That brings you to around $4,000 a month. That's your freedom number. Step 3. Build income streams that cover it. CPF Life payout is about $1,500 to $2,000 monthly, depending on your retirement account balance. A dividend portfolio, say $300,000 to $400,000, can generate around 5% yield, which is about $1,500 to $2,000 a month. Add SSBs or T-bills interest. That's another $200 to $300 more. Combine them, and you've reached your $4,000 goal, all without relying on a salary. That's the power of cash flow thinking. It gives you a clear, measurable target. You're no longer chasing some million-dollar number. You're chasing monthly freedom. Because financial independence isn't about how much you have. It's about how much keeps coming in, even when you stop working. Chapter 8. How to stay cash flow rich for life. Building cash flow is one thing. Keeping it for life, that's where true mastery really begins. Because wealth can be built in good times, but it's only kept through discipline, diversification, and direction. Rule 1. Protect your capital. Don't stretch for yield. Keep an emergency buffer and avoid over-leveraging. One market crash shouldn't wipe out years of effort. Rule 2. Reinvest selectively. Use part of your dividends to grow future income streams. Whether it's topping up CPF, adding to REIT ETFs, or buying more Singapore savings bonds. Let compounding keep working quietly in the background. Rule 3. Review yearly. Live simply. Adjust when markets shift, but don't chase fads. Focus on steady income and sustainable spending. Remember, a simpler lifestyle multiplies the power of every dollar you earn. Staying cash flow rich isn't about predicting markets. It's about creating systems that work even when you're asleep. Because when your assets pay you month after month, you don't just retire comfortably, you retire confidently. Chapter 9. Be cash flow rich, not paper rich. So here's the truth, my friends. In Singapore, it's really easy to look rich. A private condo, a continental car, a 6-figure salary, they all shine on the outside. But when the economy turns or health falters or retrenchments hit, it's not your property value that feeds your family. It's your cash flow. Real freedom isn't measured by the size of your house. It's measured by how long you can live without worrying about the next paycheck. That's why in 2025 and beyond, cash flow is king. So start small. Build your income streams, strengthen your CPF, reinvest your dividends, because every dollar of passive income you grow is one more step toward freedom. And remember, wealth isn't just for the elite. Wealth is for you. If you found this video useful, tap like so more Singaporeans can see it, and subscribe to Wealth for You for more content on CPF, dividend investing, and building sustainable cash flow. Let's build a community that's cash flow rich, not paper rich.